There are quite some interesting charts around the recent bear market in the current Glassnode Insights newsletter. We're going to go through all those charts. I'll give my comment around whether or not we have seen the bottom here, how further we might fall, and what these fancy graphics actually mean. Let's start off simply just with a price chart, a fancy price chart. There's no on-chain data on this. But the comparison Glassnode makes here is quite interesting. It looks at the 2018 crash, at the consolidation that we've seen here at 6K, and then the final breakdown, which was another roughly 50% drop, where we then in the end ended up with an 84% decline from the all-time high. So that's what we can see here in red. It's how far are we away from the all-time high. Now the comparison is drawn with this 30K support here, where we then now finally went even below 20K, right? Below the all-time high in 2017, 2018. So those two capitulations are being regarded as comparable. I still remember this time. So I started to dollar cost average in 2018 at roughly 7K. So it was probably around this time here or this time. And I was simply buying and buying and buying, and I completely went through this crash. Nobody actually expected this crash to happen. Everybody thought the floor after this, what was already quite a significant drawdown, the floor had been found, but that was not the case. We saw a final capitulation. Nowadays people say this was triggered by forced miner selling. So the miners had to get rid of their Bitcoin in order to cover expenses, and that then fueled this final collapse. Now the current collapse is somewhat different, right? It's more or less a capitulation of some of the centralized services, also of decentralized services, right? The Luna collapse, Celsius, now Voyager. The kind of support felt different in 2021, in my opinion. It wasn't as stable, right? We didn't touch the floor that often. We simply had a sideways trading range. People did not necessarily rule out such a capitulation. There was already quite a bit of bearishness. Now, what I do find interesting about this chart is the time frames. So it starts off from the all-time high with the bear market, which lasted 11 months, and then final breakdown happened, and we had a pretty sweet accumulation zone for roughly 4 months. Now, the sideways trading range in 2021 lasted for 14 months, and if we regard this as the same kind of capitulation, then we might be in for an accumulation again of another maybe 2 or 3 months from here. Nobody knows, right? History does not repeat itself, it only rhymes. That's why these comparisons are being drawn. Nevertheless, I find this chart pretty interesting. Now next, we've got a chart showing the return of the long-term holders. So this is looking at on-chain metrics, and it looks at the time when a long-term holder bought versus when a long-term holder sold. Or when we look at on-chain, right? And the Bitcoin entered the wallet versus when it exited the wallet. And when we look at this and we compare this to the Bitcoin price, we can see what kind of a multiple return on the investment did the long-term holders get, right? One simply means they are break even. They bought for the same price as they sold. And on the y-axis over here, we can see some people even made a 20x on the investment in the early days. And so we can see there are times when long-term holders are realizing losses. After the Mt. Gox crash, that was a loss of 50% that was realized in the lowest point. In the 2018 crypto winter, it was a loss of 52%. Even larger, that was realized by the long-term holders. But it's not just the short-term holders that might be realizing losses. Then after the Corona crash, the realized loss maximum was 20%. What I find interesting here is that the realization of these losses by the long-term holders actually happened after the crash. So it wasn't at the bottom of the price where we had the lowest value of realized losses for long-term holders. It was slightly afterwards. So people probably bought in at elevated prices here in the summer of 2019, and then after this Corona crash, didn't really believe in a recovery anymore, which came afterwards though, right? So this was definitely not the smartest way to sell, even for some long-term holders. This was the aggregate, right? The aggregate at the time. Then a lot of people took quite handsome profits at the beginning of 2021. The second peak was less of a trading opportunity. Very few people actually took profits at 69K. Most people took their profits at the first peak. Now currently, the realized losses by the long-term holders sits only at 33%. So we are not here at historical lows yet. Does it mean we have to go all the way to 50% realized losses? Not necessarily, right? There are models such as the logarithmic regression which do tell us that we are historically low. So different models come to different kinds of conclusions. We are obviously not in a heated environment. We are, regarding long-term holder selling pressure, already at a lower point than during the Corona crash. It's interesting though, right? People say you should hold Bitcoin for the long term. If you are in the bucket of long-term holders as defined by Glassnode, you are still losing currently though. So you really have to be in the very long-term holder category, which doesn't exist to my knowledge in Glassnode. You have to have a even longer time horizon in order to always sell at a profit. There are now people realizing losses that are not short-term in nature in general. Now there's another way to look at this, and that's not looking at the realized losses, but looking at the book value losses. Or in other words, at what price did the long-term holders buy? So we are only looking at the buy side. This one was buying and selling, right? Realizing losses. This is just looking at the buy side. And so we are looking at the buying price relative to the market price. How much lower is the market price compared to the buying price of long-term holders? And temporarily, long-term holders had an unrealized loss of 68% during the first crash, 54% during the second crash, and only 36% during the 2018 crypto winter. So those lows tend to increase over time. Currently, we are at minus 14. So if this trend here continues, we should not expect minus 36% again, right? We should be expecting a turnaround that happens earlier. It could happen now, it could happen later. We are already lower here than during the Corona crash. Now, I find this metric very, very interesting. So this shows the long-term holder cost basis. So on aggregate, at what price did long-term holders buy their Bitcoin? And that's this blue line over here. And we can see that it only tends to increase, right? It barely decreases. So this could be regarded as more or less a great indicator figuring out dollar cost averaging opportunities, right? When we have been below the blue line, this was a very nice time to DCA in. We had 11 months after the Mt. Gox crash. We had 6 months after the 2018 capitulation, and we are now just entering this again. Now, I find it interesting how this blue line actually adapts. When this rises quickly, it looks like a lot of long-term holders are entering the market, right? When it's just going sideways, then there's not a lot of activity of long-term holders. So it looks like the long-term holders, they start to enter when we have already come down from the top by quite a bit. Then they DCA in quite heavily, and then they simply keep on holding if it continues to fall further, creating then in the end the floor, right? We can then see during the 2017 run that they were pretty late to buy, right? The line, the blue line here increases relatively late, but they continue buying even more heavily when the bear market continues. And this point was also where I started to dollar cost average in. And I regard myself a long-term holder in Bitcoin. So I'm pretty much aligned here with this chart. I'm starting to buy after a crash, with the difference though that I continued buying further and further as we went down. I simply continued to DCA in. Now what's interesting around the recent rally is that the long-term holders actually didn't buy too much, right? During the move from the 5K Corona price all the way to the 60K. But then once we went down again from 60 to 30K, that's then when the long-term holders bought in a lot again. So a similar way to what we have seen in the middle of 2018, right? Once we come down from the all-time high, long-term holders tend to buy heavily. Same happened here in 2021, and then they simply just continue to hold this as a baseline. And that's again what we are seeing here. So there are a lot of parallels here. This crash could likely be compared to this crash here, right? So the middle of 2021 from a long-term holder engagement perspective could be compared to the middle of 2018. So this would mean that we probably are comparatively low, but maybe we haven't yet seen the absolute floor because we have extended further from this cost basis by quite a bit, but only for 6 months, right? So now would be the time to really start dollar cost averaging in very heavily if history is any indication. Currently, the long-term holder cost basis sits at 22.3K. Now let's look at the long and short-term holder supply in profit and loss. What's interesting around this chart is how what initially was a short-term holder loss then becomes a long-term holder loss. So see how the aggregate loss here doesn't really change that much in terms of percentage, right? Of people being in losses during the Mt. Gox crash, but that the losses simply transfer from short-term holders to long-term holders. The long-term holders here are increasing. The same can be seen here in 2018. So there is some truth to this meme, right? Not sure if the day trading failed or if I'm now becoming a long-term investor. You first want to try to ride the wave, then the wave does not continue, and so you simply just stick around. And that's then what's being meant by the losses being held by long-term holders. You simply just become a long-term holder. Now there are 2 more charts. If you so far enjoyed this content, please give this a like. And of course, don't forget to subscribe in case you haven't done that yet. Now what I find interesting around this chart is how different the mean transaction volume is from the median transaction volume. Now this looks at, in terms of US dollars, how large is a transaction on the Bitcoin blockchain on average and as a mean. Now what's the difference between the two? Mean simply means the typical transaction. So when you look at 50% of transactions being larger, 50% of transactions being lower, the transaction that's exactly in the middle, that's the median transaction. It's what's typical for a transaction in Bitcoin. And that's currently at around 400 US or so. And it tends to be larger during bull runs because people simply made so much money. It tends to be lower when we are crashing. And it also shows us how in the very early days, right, people just transferred maybe $30 worth of Bitcoin or so with a transaction. Now it's more of an investment vehicle where people transact $400. But the size in medium terms doesn't really change that much, right? It's simply just more people getting into the space. It's not necessarily that the transaction volume itself grows too much for the median player in the market. That's not too different for the mean transaction. So now we're looking at the exact average. So we also have these millions and billions of transactions in here pushing up the average. This is not the typical transaction size. This is the average transaction size. So the average gets pushed up a lot by these really large players. And we can see here that those kinds of transactions, the mean transaction is at 200K currently. Very, very large, right? The difference here between what's typical and what's the average is huge. And here we can really see the kind of institutional adoption that happened with the MicroStrategy or Elon Musk rally, right? When we got this kind of institutional adoption, which interestingly enough hasn't really changed in size, even though the price of Bitcoin went down by that much. That's different to the average Joe kind of movement, right? They actually do transfer less value now with this price decline. That's not necessarily true for the institutions. I simply find this chart interesting given the large disparity here. So it's really the big players that move the market, given that the mean is so far away from the median. And so instead of looking at the transaction size, we can also just look at the activity, or as in the number of transactions being performed. And this is now split up between large entities and small entities. So large being in red and small being in blue. We can see the retail activity has really declined. It's really low now. So institutions are still active. They have been selling. We also see this in other analyses. The small entities, the small wallets, they are currently buying, they're accumulating. The big guys are still active, but they are getting rid of their Bitcoin. So it's an interesting time. There's very little attention by retail on crypto at the moment. The large institutions are loading off. So definitely a time of no hype and potentially an opportunity. The fundamental question is, can Bitcoin survive? Can another bull run sometime in the future happen again? Will it happen in the next 6 months or in the next 6 years? That's obviously very hard to answer. But if you believe in Bitcoin sticking around, then now, at least that's what these charts here suggest, is on the longer time frame a comparably good opportunity. If you've got Telegram, feel free to check out the Bitcoin Strategy channel. Simply search for that within the Telegram app. And you might also consider to check out the premium membership. Simply search for thebitcoinstrategy.com. The link is in the video description and there's more information in this video over here. Hope to see you in that video and thanks for watching this one. Bye bye.